Be Wealthy and Smart, episode 952.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why Zillow is selling 7,000 houses. And what does that mean for you? Is this the end of the real estate market boom, or is something else coming? Well, we're going to talk about all of that today in this article from Fortune.com, written by Lance Lambert. And it says, Zillow closes troubled home flipping business amid a decelerating housing market. We just witnessed the hottest stretch in the housing market's tabulated history. In the 12 months ended August 2021, U.S. home prices climbed a record 19.9%. But industry insiders say that historic run is beginning to lose some steam, something that's already causing pain for Zillow. The issue isn't Zillow's core online real estate listing business. Instead, it's the home flipping business Zillow started in 2018 that's struggling. Last month, the company went as far as to pause the program called iBuyer because of struggle selling the homes for enough to recoup expenses. And on Tuesday, it said it will scrap the service altogether and cut 2,000 workers. We've determined the unpredictability in forecasting home prices far exceeds what we anticipated, Zillow CEO Rich Barton said in a statement on Tuesday. The real estate listing site also reported third quarter earnings in which it said it had lost a massive $339.2 million during the quarter, largely due to the faltering iBuyer program. During the same quarter a year ago, it posted a $39.6 million profit. Wall Street expects the troubles to continue this fall. Look no further than KeyBank analyst Edward Yerma's research note published this week in which he said 2/3 of the homes owned by Zillow, at least among the 600 he measured, are currently worth less than what the company paid for them. Let's be clear, the announcement doesn't mean the housing market is heading backwards. Prices are still increasing. Instead, it stems from the fact that the strong housing market, industry insiders tell Fortune, has helped to cover up some of the deeper issues in Zillow's home flipping business. After all, it's easy to make money when home prices are climbing 19.9%, but future growth is expected to be slower as mortgage rates rise, as is expected. Fannie Mae predicts 7.9% home price growth in 2022, while CoreLogic expects a meager 1.9% gain. Now that the market is cooling, cracks are showing in Zillow's iBuyer program. Home price appreciation is a major part of iBuyer profits, but as home prices start decelerating in some cities, Zillow's model does not work, so they've stopped iBuying to avoid massive losses, says Nick Shaw, CEO of Home LLC, a startup that provides down payment assistance to home buyers in return for a share of the profits, tells Fortune. Zillow's iBuyer program also got pinched by the combination of the ongoing labor shortage, soaring material prices, and product delays. Even lumber, which burst back in the spring when prices topped 300% above their pre-pandemic levels, are back up over 40% since August. Shaw says the issues in Zillow's flipping business only got exacerbated by these staffing shortages and prohibitive repair costs. But don't pin the failed iBuyer program simply on the housing market or the pandemic. This business unit was a major money loser from day one. The company struggled to both forecast home prices, as Zillow's CEO admitted on Tuesday, and turn home flipping into a scaled business. Zillow quitting its iBuyer business shouldn't necessarily come as a surprise to those familiar with the flipping industry. Most successful flipping is done by local flippers using intimate knowledge of existing home conditions, renovation costs, and market idiosyncrasies, which is something that is very difficult to obtain purely through an automated home value estimate. Ralph McLaughlin, chief economist at Kukan, a real estate analytics firm, tells Fortune. In addition, flipping at scale is very difficult, if impossible to do, across many markets because of challenges associated with securing labor, materials, and expertise. But Zillow has surely learned a lot from this experiment, and I wouldn't count them out for making a return to iBuyer in some form in the future. On the year, Zillow shares are down 37%. That doesn't include the additional 11% drop after hours on Tuesday. Hardly the return you'd expect for a company at the epicenter of a record-breaking housing market. End of article. So what this article didn't tell you was what they're going to do about it. And besides laying off people and stopping the service, what they're planning to do is look for an institutional buyer to buy 7,000 homes. Now, we don't know where all of these homes are. The only market that I've seen mentioned is the Phoenix area. And that makes a lot of sense to me because you could buy a lot of homes at a lower price point in the Phoenix area. But we don't know where all the homes are or how many are in certain parts of the country or if more are in certain cities than in other cities. So I don't think what we're going to see is a dumping of houses on the market. I do think what we're going to see is an institutional buyer come in, buy all of these homes, and rent them out to people. So my personal opinion is that's what we're most likely to see, is a big buyer come in, buy all 7,000 houses, and keep them and rent them as rentals. What I don't expect to see is dumping of a lot of houses on the market and trying to drop housing prices. I just don't see that. Now, that may happen, but I think the chances are very, very slim of that happening. But I'll be following this story and let you know if we hear one way or the other. If they get a buyer, we'll report in who the buyer is. If they start dumping houses, I'll report to you about that. So I'll keep my eye on this and see how the story winds up. But the good news is, we don't have Zillow competing for homes anymore. That's a good thing. And number two, we might have some refurbished homes get flipped and come on the market, which would be a good thing because they would be upgraded and in nice condition and be very marketable homes for people who are looking to buy. And we might also have more homes available to rent if we get an institutional buyer. So we'll just follow this, but I think overall this article made really good points that it's difficult to come in from the outside to a local market without really understanding the local market and try and be a flipper and try and take everything into account, all the tastes that people have and the action of the market, the pricing in the market, what the inventory is in the market, and all of that. And that's very difficult to do on a national basis. So I think it's a good idea that Zillow is out of this business, and it's even better for you as a consumer because that means one less competitor bidding for the homes. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button so you'll be notified as soon as new podcasts are available and you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.